But over time, that builds up into thousands and thousands of dollars of tax-free money that can be accessed while you're alive. So my husband and I, for example, we took 40,000 out of a life insurance policy and we invested in real estate. And we started out with residential real estate and rentals, but now I invest in commercial real estate like hotels and apartment syndications. So that was how we used it. But I've had people use the cash value in their policies for emergency loans. I've had them use them for investments in their own businesses and other things that they needed for their family. So it is a nice additional source of money when you want to get creative and you don't want to go to traditional lenders for whatever reason. You can go into your insurance policy. So that's the simplest way to explain how it works.
Welcome, everybody, back to another exciting show, the About That Water podcast, where we help you find that confidence by building strong financial habits so that you can actually talk about money, spend money, and actually enjoy your money. Today, I have a wonderful person who's going to help us with our insurance. And one of the things about insurance is that a lot of us really don't know about it. But this person is a financial coach, a hotel owner, podcast host, and also a life insurance producer today. She is committed to helping people find financial freedom and build wealth. As a financial coach, she equips her clients with the outside-the-box finance tips, debt payment plans, retirement planning, and so much more. With her advice, clients can exceed their financial and personal goals. Welcome to the show, Acquania. How are you doing today?
I am awesome. Thank you so much, Anthony, for having me on the show.
Yeah, you're so welcome. Actually, this is the first time we actually did a pre-recorded. So instead of you coming in with my live shows and we be kicking it and just laughing just about everything. And so you've been doing quite a lot lately. And one of the things that I do appreciate what you've been doing for the financial community is constantly giving us actionable tips and how that we can be better at our finances, and not just our finances, but our estate planning, and really looking into how we can outline our futures. So I really wanted to bring you on. It's about life insurance and why is it important for the Black and Brown community?
Oh man, this is super, super important because people need to understand that there are two things in life that are guaranteed: death and taxes. And so let's prepare for death because the taxes we really can't get around. So I really want to tell people, think of life insurance as the way to provide for your family when you're no longer here. Because if you think about it any other way, it gets a little, people get nervous or scared and they don't like to talk about death. So I like to talk about, would you want your family to be okay financially if you weren't here? And if the answer is yes, then you need life insurance. And so that is why I really go around and I educate people about it, but also encourage you to get it. And it's really important that you have life insurance outside of work. But more specifically, when it comes to communities of color, this is critical because it can literally change the trajectory of a family's life. It can also be what makes or breaks the family after a primary breadwinner passes away. So being the fact that 52% of Americans have life insurance, which is great, that's more than 50%, most of them don't have enough or wish they got it sooner. So for those who don't have insurance, I hope this encourages you to get it and understand why you need it. But for those who do have insurance, I hope this conversation encourages you to review what you have and see if this is a time to get more.
When should we start looking into getting life insurance?
You should get life insurance when you have someone who depends on you for income. And so I try to tell people that has nothing to do with your marital status. And it also doesn't have to do with the fact that you have kids or not. Because truth be told, a lot of our people are also primary breadwinners for their parents. And so if your parents are financially dependent on you, you need life insurance. If you are financially supporting siblings or even other members of your family, you need life insurance. And then, of course, if you have a spouse or children, you definitely need life insurance because they are depending on your income while you're alive. And if you don't have life insurance, they won't have money to prepare or pay for their finances after you're gone. So think outside the box, guys. Like, don't just think I'm not married, I don't have kids, because parents might also be a reason to get insured. And the same goes for parents who might want to consider life insurance on their kids. So it's not something you want to think about, but you also want to prepare your children for success. So like I have gotten insurance on my children so that they're covered because I just don't know what's going to happen when it comes to their health. And I want to make sure they get coverage when they're young and healthy. But at the same time, if you have adult children who you're still either supporting, contributing to, you may also want to make sure the two of you have life insurance. So if something happens to your adult children, you're able to cover their final expenses, their student loan debt, especially if you co-sign for it, and any other things that can come up that come with being a parent of an adult child, right? It's
Yeah,
like they never, ever are not our responsibility, if that makes sense.
it does. And because there's so many different flavors of insurance, there's like term insurance, whole life insurance. What is can you go like just kind of vaguely talk about the different types of life insurance?
Absolutely. And I'll give you something that'll help you remember. So I like to break insurance into two categories. There is term life insurance, which you just mentioned, and then there's permanent life insurance. Permanent sounds exactly like it says. It doesn't go away, right? But let's talk about term first. So I like to kind of use the analogy, term is like an apartment lease. It is a contract that you have with an insurance company, and you get that lease for the amount of time you choose. You can do 1 year, 5 year, 10, 15, 20, and sometimes even 30-year leases. But what that contract says is if I die in the time in which I have asked for coverage, the life insurance company will pay your family the check, right? If you get $1 million term policy for 30 years and you die within those 30 years, they write $1 million check to your family. And that check is completely tax-free because life insurance proceeds are not taxable. However, if by the grace of God you live longer than the 30 years, at year 31, if you pass away, they don't write any checks because your contract expired or your lease was up. And the only way to continue coverage is to get another policy or request the one you have is extended, right? So apartment leases are great temporarily, right? But eventually you want to get your forever home. So that leads me to my second analogy, which is permanent life insurance. It's more like your forever home. Once you get permanent life insurance, you're covered for the rest of your life as long as you pay your premiums and it doesn't expire. It could last you another 50 years or another 10 years. However long you live, it's going to cover you, and it doesn't matter how old you are. But permanent life insurance has a lot of different names. Whole life is one of them, index universal life, variable universal life, fixed life. And people get confused because whole life's like the oldest one. So everyone just calls permanent insurance whole life, but it's actually that's one type of it. But the best thing to think about is one, it's your forever home. So you really may not need more unless you have a need for more insurance, like you didn't get enough the first time or your life changed, you got more dependents, or you have a bigger estate. But it's also more expensive, right? Term is cheap because mathematically, you're not expected to die. Most people do not die. Only 2% of term policies are actually paid out. And that's why they sell them at a low cost because the insurance company is betting that you won't pass away. But permanent insurance, it's 100% guaranteed you're going to die. Everybody's going to die. So they know that there's 100% chance they're going to pay that policy unless you default on your payments. So they charge you more for permanent insurance to be able to cover those costs. So I always tell people if you are in a financial position where cost is of a important essence and you don't have a large budget, go with term because it's the most affordable way to protect your family. And you can get $1 million policy for pennies on a dollar, depending on your health. But when you either have lower need for insurance or want to be more strategic with how you use your insurance, then permanent life insurance could be a good option for you. What I normally recommend for my clients is convertible insurance. So that's like a term policy that starts out inexpensive and cheap. And then you have 10, 15, or 20 years to turn it into permanent insurance. And then when you do that conversion, that's when the person has insurance that doesn't expire. So that's a lot, I know, but that's the
That's
best
great.
way to think about it. And hopefully the analogies will help you.
Yes. And we also hear about these terms, like you hear all the time on social media that people keep saying, well, you invest all this money into these whole life insurance or the permanent life insurance. Correct me on that one. And they talk about withdrawing money that you can live on it today. How is that possible?
That's a great question. And so this is a part of my story. So right now I'm going to preface this with this is not for everyone, but this is definitely something I've done. So I'm not just theoretically telling you what's possible. But when you have permanent insurance and you get it like my husband and I did when we were young, healthy, and didn't have no kids, you can really build a lot of cash in a policy because every time you make a payment, a portion of your payment is going to cover the cost of life insurance. The rest is going to go into a cash bank. That cash bank has the potential to earn interest or dividends depending on what type of policy you have. And so everybody likes the word dividends. Normally they think about it with stock, but it can also be paid out with life insurance too. But what that essentially means is you have money in a policy that earns money and all you're doing is paying for your life insurance every month. You don't have to do anything. What most insurance companies do, however, is they take your money or their money and they put it in the stock market. And then that stock market money makes money, right? That's why most people invest. Well, when you have a permanent insurance policy that builds cash value, the insurance company is going to share that profit with you. So they will take their profits and they will spread them out amongst all the policyholders. And so you get interest every year or every quarter. You'll get a dividend check every year or every quarter, depending on your insurance company, right? But over time, that builds up into thousands and thousands of dollars of tax-free money that can be accessed while you're alive. So my husband and I, for example, we took 40,000 out of a life insurance policy and we invested in real estate. And we started out with residential real estate and rentals, but now I invest in commercial real estate like hotels and apartment syndications. So that was how we used it. But I've had people use the cash value in their policies for emergency loans. I've had them use them for investments in their own businesses and other things that they needed for their family. So it is a nice additional source of money when you want to get creative and you don't want to go to traditional lenders for whatever reason. You can go into your insurance policy. So that's the simplest way to explain how it works. But how much cash you have depends on your contract, depends on the performance of your life insurance company and how the market is going. But most of the policies are not directly invested in the stock market. Most, there are some that are. And as a result, this money is not as volatile as the stock market. So this is also a way that some people choose to diversify what they're invested in because they'll have their investments in the stock market. They'll have life insurance to protect their family, say a large term policy, and then they might get a permanent policy to have additional tax-free dollars they can leverage while they're alive.
Yeah, because that's kind of what I do. I have the hybrid approach.
Mm-hmm,
It
mm-hmm.
makes life a little easier for me,
Yes.
mostly for the way how my situation is. And I think that's helpful and it's good to know that people can actually play around with it almost like Baskin Robbins. Like if you got the money, go for it. Just
Mm-hmm,
pick what you
mm-hmm.
want.
Pick your flavor, right?
Yeah.
But that's why I tell people work with a professional life insurance producer. Don't try to piecemeal it on your own or call the people you see on TV commercials because they're promising you cheap policies for $10 a month or whatever, because sometimes that one policy doesn't fit your entire plan, right? And finances are personal. So you have to really look at, what is my situation? How much insurance do I really need? And if I need a lot and I have a small budget, what do I need to do to make this all work, right? And so that's why I'm a math person, I'm a numbers person, but I'm also a big picture person. If you're honest with me and you tell me what your big picture is, then we can work on the numbers and give you a plan that works for you.
Awesome. Now we enter the third segment, which is the futures. What skills or habits that you feel is going to take you to the next level?
Ooh, that is a good question. Well, I love to network, I love to talk, and I love to teach. And I've been doing that throughout my life in different stages, phases, and with different levels of confidence. But I'm proud to say that that's what's held me down. So I definitely believe in my next phase, I'm going to be doing more networking, teaching, and teaching because I love to take complex stuff and break it down. I love to make things accessible that used to seem impossible. So my big thing right now is encouraging more people to pursue hotel investments and hotel ownership because that's a space where we need more people of color. So I've been doing free webinars and sessions to talk about that. I've also done a lot to educate on life insurance, like this show. So thank you so much for the opportunity. And then networking. You and I literally met through a powerful network of
Yes.
financial nerds, and I plan to do that until the day I die.
There we go. Is there anything that you want to leave the audience before we dive into the final four questions?
Just do your necessary financial checkups every year. And don't forget to change or update your beneficiaries after major milestones. So, marriage, divorce, and new kids. And because we have plenty of examples where celebrities, oh, Kobe
Yeah, look.
Bryant, Prince, Aretha Franklin, have not done proper estate planning, and it has resulted in very costly probate processes for their families. So let's just do our families a solid and give them the gift of peace by getting our affairs in order ourselves.
Awesome. All right, you ready for the final four?
Yes. I'm nervous. What should I prepare for?
Number one, what does wealth mean to you?
Oh, I love this question because I have a platform, The Purpose of Money, and I do feel like the purpose of money is unique to each person. So, wealth means for me the ability to have the time and freedom to spend with my family doing the things I love whenever the heck I want to.
Number two, what was your worst money mistake?
My worst money mistake?
Mhm.
Probably not taking risks sooner. I started building for my future and retirement early at 16, but I did it in a very conservative way, putting money into a Roth IRA, but not really investing that money in the most aggressive options I could at the time because I didn't know. And now that I'm in a position where I have wealth and I have money that I'm willing to risk investing in personal ventures, private equity opportunities, I'm getting access to more ways to multiply my money faster. But I didn't take those risks until now. But I am okay with the timeline because I feel like that's the way God wanted it to be. But I could have taken risk probably 5 years earlier and been a little further along at this time.
Yeah, time and place for everything, right?
Mm-hmm. Mm-hmm.
Number three, what is your favorite financial or non financial book?
Whew, okay, so favorite book was Rich Dad Poor Dad by Robert Kiyosaki because that's what really turned me into a money nerd. And it is a financial book. Favorite non-financial book, Pearl Clage. I read it a while ago, a long time ago, actually. But I actually like any of her books. But I'm trying, why is the title escaping me now? But it's one of her first books where she writes about a woman who contracts HIV and how she navigates love and life afterwards. It's a great, great book. So Pearl Clage, if you ever look her up, look up her books. One of her first ones is one of my favorites. But now I read nonfiction, so it's so hard for me to remember the fiction books I used to read.
That's okay. Number 4, what is your favorite dish to make?
Ooh, that's a good one. So I am a cooker who cooks out of love, but not that often anymore. And so when I do cook, I cook large portions like Thanksgiving dinners for 20 something people or a lot of food. So sweet potatoes are one of my faves, and my family loves my sweet potato casserole with the marshmallows on top.
Okay. I might try that out one day.
Yeah, it's good. Come to Thanksgiving.
The very last question of the show is, where could people find out more about you?
Of course, check me out on Instagram. That's my favorite place to play at the purpose of money, at the THE purpose of money. Make sure the D is there. And thepurposeofmoney.com is my website. On both platforms, I have an ability to connect with me for free. So if you guys want to hang out and have a quick chat, I'm here for it. I'm also always hanging out wherever I can on YouTube. So Acquania Escarne is my name on YouTube. You can check out some old podcast episodes as well as videos.
Awesome. And thank you so much, Acquania, for coming on the show and actually providing so much information, definitely about life insurance. And if you guys got anything out of this and you just want to learn more about Acquania, or if you just want her to have her, I can ask her to come back on the show. We can do a little deeper dive into any of the life insurance policies, or even just talk about her syndication for real estate and so many other avenues. Just let me know in the comments. Just even email me at anthony@aboutthatwallet.com. Make sure y'all sign up for the aboutthatwallet.com newsletter at aboutthatwallet.com/newsletter. And I look forward to talking to you all and have a great time and enjoy the rest of your day. We out.
Thank you.
Peace. In the Port-au-Prince of Prince. Oh my gosh.
Port-au-Prince. You could just say Haiti.
Okay.
You could start over, do whatever you need to do.
All right. The person I have on coming today is, you know what? We're just going to go straight in. Okay.
Anthony, what's my name? Do you remember?
Okay. Yes, I know. Connie, I wanted to say, save you for the last part. All right.